Hello there. Today I'm going to talk about two things. I'm going to talk about inflation, how to invest in a high inflation environment during low periods of Fed rates. What I mean by Fed rates is the interest rates that they raise on the private banks in the United States. Okay. So first we're going to talk about bond rates. So this is a bond, or this is the equal equal sign. This is an equal sign, okay? As they raise rates, the bond prices drop. Over time, though, the yields go up on the bonds. Okay? It's very important. Very, very important. The bond prices drop, however, yields on bonds go up. So if depending on what the maturity of the bond is, they will go up either in the short term or the long term based on the maturity of the bond. If you have a long term bond, this impacts you more than if you have a short term bond. Short term bonds are more like cash. They don't fluctuate as much when bond prices when the Fed increases rates. But if you have a long term bond like I do, I am very risky when I invest in bonds. Now, I have this bowl here, and this bowl is a representation of inflation. So in the United States, we have an 80% inflation rate in the last 2 years. So about let's say 30% a year. Let's just round it down a little bit. 30 or 40% per year. Okay? And so what's in this bowl is the money they put in the bowl. The money they put in the bowl. Now, what leaks out of the bowl is the products, the cost of the products. And they measure inflation based on the cost of their products, not what's in the bowl that they put the money in. Because it's not exiting a banking system. The only thing exiting a banking system is what's leaking out of the bowl. And so those are the prices of your goods. And so when I invest based on those two factors. I invest based on interest rates, and I invest based on inflation. It's all about the rate of return. Can you beat inflation? Number one is the most important thing. Can you beat inflation? And can you hypothetically beat rates? Now, chances are you're never going to get better rates than the banks because the banks have all the money. So it's a centralized financial system. It's not there to advantage. You're not in an advantage over the banks. And so you have to really think about the world in that way. When you invest, you have to look at it through the lens of what the Fed's doing. And then when they raise rates, everything goes down. Stocks, bonds, real estate, everything sort of goes down. They're all basically correlated. You cannot get an asset that is fully inflation proof. I mean, you can get gold or Bitcoin, but Bitcoin actually is correlated with the stock market. They did a few studies. Um, I don't like Bitcoin. Don't invest in Bitcoin. And gold, while it is not correlated with the stock market, it still doesn't beat inflation. So why buy gold? So in my opinion, buy bonds and stocks. Bonds don't always beat inflation, but when they raise rates, they might. And so holding long-term bonds, I believe not. Now, here's the difference between me and some other people. I buy long-term bonds. I buy index funds. I don't buy long-term bonds in individual bonds. I buy them in groups. So imagine having, I don't know, instead of having one bond, right? Having hundreds of bonds. So I have hundreds, right? And so my hundreds of bonds, they get bought in this index, and the index keeps buying them as the price of the bonds drop. They keep buying the bonds as the price of the bonds drop. So I make more money on the yield as the price of the bond drops. The more you pay, the less you make. The index fund immediately buys the bonds at the lowest price. That's why I love index funds. Same thing with stocks. Index funds, well, they're not the best. That's timing compared to bonds. They are very good at buying dollar cost averaging in the stocks because stocks normally always go up faster than bonds and inflation. 75% of the time, stocks beat inflation. 25% of the time, they don't. Now, I'm worried that it's going to be a higher ratio in the future. It's going to be more like 35% stocks won't beat inflation, right? So that worries me more. Younger people are going to have an extremely hard time building wealth, including me. it's going to be a challenge. We're going to have to sacrifice our salaries in the stock market if we want to be successful, right? And so I just want people to really think about rates, inflation, rates from the Fed, inflation, and then your rate of return. And are you beating inflation first time? Are you beating inflation, and are you beating the rates that the Fed is freezing? And are your bonds and stocks dropping because of rate, the rates? Did the stock company did the companies you invested in with stocks, did they borrow debt an unfixed amount so the Fed raises rates, now they're screwed? Did they do things with bonds? Are they screwed? Well, bonds, this correlates directly with interest rates almost. But like, you have to think about it like that. So many people don't think the way I do, and I find it so fascinating. Like, these finance gurus online, they're so hype. They're all like, "Oh, let's keep buying the same stocks that keep going up." No, you're gonna in the next 10 years, those stocks are probably not gonna be worth as much because the Fed's gonna they might raise rates. Now, again, a lot of people. I have an uncle. I have an uncle. He's a very liberal guy. I'm a liberal. I'm pretty liberal too, but he's more liberal than I am. He trusts the government a lot more than I do. I don't trust the government at all. But he's like, "Oh, I believe the Fed won't raise rates. They're gonna keep the rich people rich." I'm like, "No, the Fed wants their money back. That's how they make their money. Is they raise the rates so they can collect more interest on the banks and stuff. They're not gonna let the banks go scot free forever. Eventually, the public's gonna have an outcry or whatever, for that." And he's against the banks, but I'm like thinking to myself, I don't know, right? No one can predict interest rates. If I could predict interest rates, I'd be a multi-billionaire. But I can't. And so that's why I invest in nearly every asset class that correlates with the Fed's interest rates and inflation. Now, the Fed indirectly doesn't print money. It's weird. The way it works is they tell someone else to print the money, but they don't directly print it. It's another government agency. I forgot the name of it. But like, that's the thing, is you have the presidency who elects both the printer of the money and the Fed, the chairman of the Fed, and we have this indirect private system controlling everything on our US dollars. And so that is extremely scary, right? I'm completely against this centralized, they control everything in our financial lives, but we have to live with it. We have to live with the reality. We can't invest in gold and expect somebody to pay more for our gold. That's not an investment thesis. At least you're getting cash flow with bonds and stocks. At least you're getting some amount of dollars back. You might not get a lot. You might get 1 to 2 to 3%. I'm making 3%, but you're at least getting something, right? And so I am a cash flow investor. I focus on cash flow. I do focus on value a little bit. I do pay a lot of money on stocks. I will admit that my PE ratios are not very good. Um, when it comes, I buy like stocks at like 40 PE ratios, but let's be real, the market's at like 38 PE ratios. So I'm only I'm only like $2 higher paying. You really shouldn't be paying as much as I am, but I am. So because I'm buying index funds, and index funds dollar cost average into every stock in the stock market, but that's the way it works, and it's hard to buy, it's hard to dollar cost average into something that is overvalued, but dollar cost averaging is better than timing the market. There's been multiple studies done saying where if you just put a certain amount of money in the stock market, you would beat the market over the long run than if you just waited for a stock market crash, right? And so every study says that. Why would you time the market? Why wouldn't you just put $65 in a week or whatever, and you just keep investing? You don't really worry too much about it. You do worry about what the Fed says, because when the Fed says something, they're just lying to you. This is immediately assume they're lying to you. So anyway, I I'm having a hard time explaining it, but I will not talk about my portfolio. I think you guys, or whoever's watching, will understand that I have a very different portfolio. I have a really different ideal, like a really different portfolio compared to most financial analysts. If you look at my portfolio, you'll see that it's a very different way of thinking, and I don't know how to explain it because I do like single stocks, but I only invest in certain types of single stocks. That's the difference between me and somebody else's. I buy single stocks that hold physical real estate, or they hold something that's more valuable than than just equity in a equipment like a car or something. You know what I mean? I like to buy land. They're not making more of that. So I do buy stocks like that. So I don't have to buy real estate. I can just buy cash flowing real estate from a stock that holds the real estate and cash flows it and gives it to me. And they have to pay 90%. They're legally obligated to pay 90% to me. That's amazing. What deal you're going to get that, and it's in my tax-free account, so I'm not going to get any taxes. So again, guy, like again, you don't always do what I'm doing. It's probably a bad idea what I'm doing, but I'm hoping that I will beat inflation based on my three asset classes that I've set in my portfolio. Two are indexes, one's not. I'm hoping that everything goes well. Again, it's all more about hope. Hope's not a very good investment strategy, but neither is buying gold or buying Bitcoin, which Bitcoin's a scam. Don't be buying Bitcoin. I don't know why you would buy Bitcoin, because Bitcoin's the same thing as gold, except it correlates higher with the stock market than with gold. So why would you buy? I would buy gold over Bitcoin, but gold still doesn't make any sense. I would never buy gold. It just sits there. What is it doing? It's not generating any dollar bills out of the stock. No, there's nothing there. You hold on to it and you can fondle it and that's it. So again, like I'm very simple minded. I'm a very skeptical investor. I invest in only things I truly understand a little bit. Right? I understand it a little bit. I don't understand it enough to explain it in detail. But I can explain it to a 5-year-old, or I can explain it. That's what Peter Lynch says. If you're gonna invest in a stock, you have to invest like thinking like a 5-year-old. You can't think of like or a 90-year-old. You don't want to think like a hype investor, a hyper beast, who's marketing Bitcoin or cryptocurrency. Although I don't think Bitcoin's being hyped up as much as they used to be. But like other cryptocurrencies, I've noticed 1% a day. Do you know what 1% a day is? Do you know what 1% a day is? That's higher than Warren Buffett. Warren Buffett makes 20%. 20%. Well, I don't have 20 fingers, but 20% a year, right? 1% a day is 300% a year. There's 356. We will forget the 56% because it doesn't really matter. You're still being Warren Buffett by what, 120% or more than my math's way off. But like, think about that, guys. That doesn't make any sense. I've seen so many people share screenshots 1% a day on an interest rate bank account. No, that's impossible, right? Warren Buffett makes 22% a year. There is no logical explanation for you to be making 1% a day. You would be richer than Warren Buffett in like what, 15 years? 10 years? I don't know the math, but it's really, you're going to make 1% a day. Good luck. Unless you're a bank making infinite amount of money from the Fed giving you money. Good luck. Anyway, that's my whole thesis on investing. If Warren Buffett's making 22% a year, you should expect to make maybe 10, maybe 7% a year. You're not going to make that much money. And if your wage is the same every year and you're not investing anything, then you're not going to make any money, technically. You're just going to stay the same. You're going to have a 0% return because you didn't get a raise or anything for your job. So you got to make sure that your biggest wealth builder, yes, is your income, but what do you do after that income, right? And so, I don't know. I feel so saddened by our society just hyping up these coins, hyping up these cryptocurrencies, and then just giving them out to people, like saying, "Oh, here's Bitcoin, here's Ethereum, here's they're mining, they're Bitcoin mining." But I'm thinking to myself, or they're mining cryptocurrency. But crypto mining doesn't add to actual cash flow. It doesn't produce like farms. Like if you have a farm, right? It produces food, and then you that food that has seeds in it, and you replant the seeds, and it compounds over time. You expand the farm. You buy more stuff with the farm, with the food that you sold, and you expand. You see that with a farm. You don't see that with cryptocurrency. Cryptocurrency is very limited. There's only 21 million Bitcoin, right? Gold, same thing. There's only a limited amount of gold until we find meteorites to mine more gold. What I mean by like meteorites? You fly with a spaceship, and you go and you mine it on the freaking meteorite, right? And so like I don't understand these people where they're like, "Oh, gold, silver." I'm like, yeah, but I can find gold and silver out in outer space. They're not uncommon. like eventually gold and silver, if outer space is a big deal in the future. I don't know if it will be. I doubt it will be because we're too young to really be going in outer space. But in the next 2 centuries, the outer space will be a very big deal. Um, and so, like, when you think about it like that, gold's not a good investment for a family to hold on to for many generations. It's just not. And so humans just have a value to it because they like the shininess of it. Um, I hope you guys enjoyed this rant about interest rates and inflation in the United States, and I basically any country has the same similar economic principles. Um, anyway, if you enjoyed this rant, you can I don't know what you can do whatever you want. Take this rant and apply it to your own investments. I'm sure everyone is trying to do this anyway. I hope everyone's listening to the Fed, trying to understand. Okay, we can't time the market, but we can put time in the market, which means we have the money in the market for our whole lifetime until if the market ever decides there's a nuclear war going on and everything goes down and there will be no recovery. But until then, I don't think that will ever happen, and I really hope that doesn't happen. So yeah, this is a rant.